the vertical axis here, and then we have the horizontal axis. So we have horizontal is the time, because that's the time on our chart. The vertical axis is what? It's the price. Okay, so we're flipping it when we're looking at it algorithmically. When we look at charts, we're looking at it with prices down here, and I'm sorry, prices over here, and time is down here. But the algorithm's looking back across time to a specific price. So we're finding where two price and a point where 2 points of reference where price and time agree. Time wise, that low is the first low that forms after 10 o'clock. It's going to drop down into that low because the first portion of the day has been going up. So the algorithm does what? It seeks liquidity. It seeks discount. It ain't looking at you and saying, oh, look at him, he's got one micro contract on. I'm going for a stop. Son of a bitch. It's time to get even. It doesn't work like that. I never said that, but trolls and goofballs and idiots out there, they like to say that. They take things out of context. It doesn't matter if you have your trade there with a stop. It doesn't matter if you're in a position or not. Somebody has a stop loss right there. And if it's one contract, it doesn't matter because the algorithm is going back there because it's going to do what? It's going to take out the liquidity below that low, that low, that low, that low. It ain't just that low. It's just that's the first low that formed after 10 o'clock. Now, what happens if we have a really long, protracted, stretched out day and it's more like a trending day? Would I use the very first low in that regard? No. In that regard, because it's a trending day, what you're going to do is start at noon, 11:30 in that 30-minute window. As soon as 11:30 starts, for that next 30 minutes, that's your opening range, by the way, for lunch hours. This starts the look back period. And then if this was like a trending day, which is not, this is not a trending day. Nobody can tell me, and nobody would be able to make a case in a courtroom where a jury and a judge would say, yep, this is a trending day. This is consolidation. Okay. If this were not consolidation and we had this long block of price action and it was a straight up day, I would use the very first, like we did it here, it would be the very first low and going backwards in price action, going towards the 10 o'clock, the most prominent low. In that case, it would be this one here for me. That's the one I would use. So the lunch macro would be simply looking for a turtle soup from here down to that low, and I'd be done. And I would wait for the PM session or just be done for the day. But because we're in a big block of price action like this, we had the market run higher. We can then go back to that 10 o'clock. And I've talked about this. This isn't like I'm making it up now. I'm just giving you more information on how you can use a trending day versus a consolidation day, the rules that apply with that, and how the algorithm is going to refer to it. And I did not just make up the 11:30 to 1:30. That's why I told you that's when the lunch is. It's 2 full hours. It's in New York time, 11:30 to 1:30. Because what is 1:30? 1:30 p.m. to 2 o'clock in the evening hours PM session, Eastern time. That's your opening range for PM session. So the lunch macro has to end at 1:30 because what does it start then? The next 30 minutes is your PM session opening range, which sets the stage for your 2 o'clock to close for PM session trading. In and of itself, right now, you know more than 99% of the people out there that trade intraday. Think about that.